Hello, welcome to another talk on money, business, and investment. My name is Jose. I'm the chairman of Master Investor. Welcome to our community here. Ensure to subscribe to our channel, turn on the notifications so that we know when we go live or upload a valuable talk that can literally change our finances forever. As long as we're applying what we're learning here at Master Investor, go to our website, get our ebooks. We have 3 digital courses right now available with 3 ebooks. They are a must read for our wealth, to understand how wealth is created, to understand what is money today, because money evolves through time. The laws changes. Money becomes what it is today, which is debt, is an idea backed up by confidence. It's not real money any longer. It's a full currency. And money must move from a cash flow and asset to another cash flow and asset in order to maintain its value. Today's topic is why the need for speed is key in wealth. Understanding retail apocalypse and Amazon's ongoing impact on retail. One of the best things we can all do is invest in our financial education, because that is how we become an inside investor and a business owner that understands how to raise capital, how to build wealth successfully with real businesses that turn into brands, because we understand the basics. We have mastered how to multiply money through sound investing. Today, we have new rules of money. That's why we created the 10 new rules of money. We also have how to build cash flow with the internet, turn passive income on. Go grab that ebook. That's a great one to have. If you want to learn how to take your finances to the next level, how to put it all together. If you don't have a business yet and you want to start a business online or physical business too, it applies to everything. And if a person has an existing business that wants to take to a whole different level, then the ebooks that we have available, such as how to build cash flow with the internet, will be helpful to understand how to use leverage systems and new technology that can literally help us increase our bottom line of our businesses, or also known as positive cash flow. The most important words in the business language are cash flow. The second most important words are due diligence. When we combine the most important words together and we apply them in every single investment that we embark on, then we can assure ourselves and our team, including our partners, if we have other investors in our operation, we will ensure that everybody has a sound asset and we're creating win-win partnerships, because we understand how to make a solid business with an infrastructure that is unbreakable. However, there's not any business can go down, right? There's not such a business that will never be able to go down, because if we don't maintain the 8 integrities that we're going to cover today of a successful business and our businesses, then our businesses will fail eventually. Even if one of the 8 integrities is missing or is mismanaged or is not established in the business, then the business will fail. And we want to avoid mistakes that are already made by other people that already have done what we want to do. That's the fast track to success, is to not only become a better leader, but also learn from other people's mistakes. Real mentors, real teachers that already have done what we want to do. If we have any questions, drop it in the comments section. If you're watching this live, then we also turn the live chat on so that we can all interact. And let us know if you have any comments on today's talk. I hope that this is helpful. Today's summary is not companies too large to collapse. The essential 8 integrities and elements of a thriving business. The requirement for speed is key. Looking back may provide clear vision, but there's not necessity to be oblivious today. At the end of today's article, we will cover a bonus question, which is how to unlock financial freedom using real estate cash flow strategies. Don't miss out on the domino effect that could lead to our financial freedom. If we have ever organized a party, it is likely we depended on Party City as the ideal one-stop shop, loaded with seasonal decorations. Who could forget those Halloween costumes? It is difficult to conceive that the chain retailer could ever collapse. Nonetheless, in early 2024, Party City declared bankruptcy just a day after revealing significant layoffs at its headquarters. Here's a passage from CBS News. The filing was submitted in bankruptcy court in the Southern District of Texas as per court records acquired by CBS News. The company faced liabilities ranging from $1 billion to $10 billion, according to the filing. Many young individuals who have not experienced Party City as such an emblem will find it challenging to grasp the significance of witnessing such a large corporation fall so rapidly. But they will undoubtedly have the chance in their lives to observe similar events occur. It is the nature of major entities to decline when fast startups pursue them. And again, when new technology becomes available to all of us and we have artificial intelligence and we have more systems that anyone can literally use just by connecting to the internet and applying the artificial intelligence in our businesses, eventually we're going to find artificial intelligence in high-end technology in all the businesses because everything is going digitally. 1989, that's when we went from the industrial age to the information age. I like to call it the entrepreneur age because we have to bring out the entrepreneur spirit to the world. We have to bring it out of us because we have to learn how to bring a product into the marketplace, how to solve a problem of other people. It's not about us, it's about solving other people's problems. We have to become more generous when it comes to building wealth. That's how we become wealthy, is by practicing generosity, by understanding that we have to serve other people. And we want to build product-based businesses, not service-based businesses, because we don't want to be there present. We want to create a product that is a solution for the masses. And we need to really study our niche and figure out who is our avatar, who is our preferred client, who is ready to purchase what we have. And we need to reverse engineer that niche. Can we scale it? Can we get new customers every day? Does it have a scalability? It's very important that we don't go into a business where we have a cap, where we can't grow any longer because we reach the maximum reach for our niche. We don't want to go into any niche that gives us a limit on how much we can expand. So we have to think everything very in detail. We have to put a plan together because investing is having a plan. That's how we define investing here at Master Investor. Investing is having a business winning plan with a lucrative exit strategy. And once we have that, we know exactly based on facts, not opinions, that we're going to make this much money. This is going to be our return on investment. How fast will we get that return on investment, and how often we will continue to collect positive cash flow, or also known as passive income. And that is one of the incomes that we can build. It. Other type of income is capital gains income. There are three types of income that exist: earned income, capital gains income, passive income, or also known as positive cash flow. Here at Master Investor, rule number one is that we work to build passive income and multiply money through sound investing, which requires higher level of financial education. And it makes us be committed to studying and learning from mentors ongoingly. It never stops. We don't graduate from being an entrepreneur. There's always a learning curve ahead of us, and we need to follow that learning curve as much as possible. Always continue to grow our leadership skills, because when we have companies that are growing, they will grow as much as we grow. It always reflects the founder and the chairman of that company. The companies reflects, the bottom line reflects the leader of that company. So how do we grow our companies? By growing ourselves through personal development and financial education, learning how to network with the right folks, with the right individuals that have the right mindset, with the wealthy context. Two types of mindset when it comes to money. We have the poor context, and then we have the wealthy context. We want to operate with the wealthy context, and that mindset is found on the right side of the cash flow circle. On the left side of the cash flow circle, we find the employee and self-employed. They work for earned income, or also known as ordinary income, active income. Basically, the person has to sell their time for money. They have to show up, and then they get paid. If they don't show up, they don't get paid. It is impossible to become wealthy like that, just working for earned income, because there are so many hours that a person can work per day, and the person that works all day for earned income has no time to build passive income, which requires time. It requires effort, focus. It requires a lot of time and energy. It's not easy, or otherwise everybody will do it. However, it's easier today than before because of technology and artificial intelligence. So we have to put everything on a balance and figure out what is going to be the best path towards our future. What is that we want out of life? Do we want to leave a legacy? Do we want to achieve our dreams? Do we want to manifest what we desire? Because if that's the case, then since our whys are big enough, we can begin to reverse engineer a perfect plan, because investing is having a plan. So we need to put out a plan that will help us create passive income, in excess of passive income, where it pays for our living expenses. And that's the first step to financial freedom. And once we arrive there, then we continue to build the assets column. And the more assets we acquire in different asset classes, there are 5 different asset classes that exist today. We have, number 1, business. We have real estate, crypto, paper assets, and commodities. They all require financial education. And here at Master Investor, we recommend and we encourage everyone to learn about each asset class and begin to invest among the asset classes that exist, because that's how we protect ourselves from down economies. In any type of economy, the economy goes up, sideways, and down. And we can make tremendous amounts of cash flow in any type of economy. Sometimes we will get capital gains income from an investment. However, we will know beforehand that that is what we're going to get, because we know based on the facts of our due diligence report that we will do on that investment, we will know whether we're getting passive income or capital gains income, how fast we will get that money back. Everything is calculated. The risk when it comes to investing is calculated. So it's not necessarily business and investing that is risky, like majority of people tend to think. It's the investor behind the investment that makes it risky. So if a person lacks financial education, of course, the risk is going to go up the roof, because the person does not know how to invest yet. That person needs financial education. And then once a person acquires that financial education and has the basics of business, then we can actively get involved in investing with the plan that will give us positive cash flow. That's the type of returns that we want to achieve, is cash flow, because that is what gives us total freedom. And eventually, when we have that cash flow coming in, we recoup the initial capital back. At that point, we reach infinite return on investment, or also known as IROI, infinite return on investment. And that's the holy grail of investing. That is money for nothing. That's when we literally have none of our capital invested into the deal. Whether we have debt on it, we could have a loan, or we could have done 100% financing on the deal. If we have no capital of our own into the deal and we still collect passive income from it, regardless to the fact that we may have a loan on it. It doesn't matter. As long as we don't have our capital invested in it and we collect passive income from it, because we're paying all the expenses from the cash flow of the business, and whatever is left, that's our bottom line, that's our positive cash flow, then that is money for nothing. We're paying the debt service back with the money that the business is creating. We're paying all the expenses, and whatever is left is our positive cash flow. And we have none of our money into the deal. That is infinite return on investment. Meaning that we can achieve that type of return from the very beginning as long as we use 100% debt. And the job number one of a business owner is to master how to raise capital. And the number one skill is to sell using systems and smart marketing. Basically selling without selling, because the systems are doing it for us. And that's the skill that we have to master as a business owner. And the number one job, our duty, is to raise capital. And when we build businesses, we're building businesses that raises capital from the front end. It has to be a real business that solves a problem that is in high demand. And we're doing it so well that it raises capital from the clients and also from the back end, from banks, private investors, and so forth. And the job number one of an inside investor is to multiply capital, whether that be a loan, a credit card, our own capital, or passive income, or even capital gains income. We have to multiply money through sound investing. That's the job number one of an inside investor. And that is what we are mastering how to do here inside of Master Investor, is to become a business owner, an inside investor that understands how to multiply money, how to raise capital, and how to put deals together that attracts people because of the solution that we are offering, and also because we are profitable. We have business integrity, and we have intrinsic value, meaning that we are protecting what the company is doing for the world. If we need a patent, then it gets filed. If we need to trademark, we'll trademark the logo immediately. We need to make sure that the legalities are in order. We have to treat our small business like a big business. And when our business is big, we treat it as a small business. So we ensure that all the legalities are well maintained and established in the company so that we can continue to grow the company on autopilot. At the end of the day, our businesses will grow on autopilot because they are sound businesses, because a business is a system of systems doing the selling and telling for us. So no business is too big to be guaranteed not to fall. If the team of that business gets distracted and the business integrities are not well maintained, then the business, regardless of how big it is, will fail. And the business also has to be willing to innovate. We have to create an innovate department, an innovation department in our organizations. We have to be the leading entity in our field, whatever our niche is. We have to make sure that we're innovating and we are attempting to serve our customers in new ways because we're listening to them. We have any communication. We have lines of communication with our customers, and we're figuring out what else do they need, what they don't like about our current product, what other problems do they have that we can serve them based on whatever we're already given them to solve the current problem. So it's important that we listen to our customers, that we have great customer service, because today we have so much competition that if somebody doesn't like the customer service or the experience that they're receiving, whichever product that may be, it could be something as simple as a coffee jug or anything, that the person is selling to the world. We need to have customer service so great that exceeds everybody's expectations, because that's how we're going to maintain those customers to keep coming back and do business with us. There are too many competitors today. Whoever's not taking care of customer service as a priority, that business will eventually fail. Amazon is Amazon today because they're willing to change, adapt, innovate, and on the phone or on the chat, and then they solve the problem immediately. We can choose to talk to somebody that is a real human or somebody that's an AI. So we have options, but they're there to solve the customer's problem. And it's important that we apply that in any size business. So what happened to Party City? Amazon, when it comes to the fall of big giants, it often comes swift and fast, seemingly without warning to those who aren't paying attention. As we can see, we have the diagram where it shows shrinking Sears. Sears was struggling before merging with Kmart, but its revenue has worsened under CEO Eddie Lampert. And we can see the company's culture and the performance of that company by studying the graphs and the revenue of each company. We can see why they eventually fail. They lack one of the 8 integrities that we're going to cover today of a successful business. We find that inside of the cash flow triangle, inside of our ebooks, and I'm going to also cover that on this talk. The history of Party City's income is shown in this chart from Seeking Alpha. As we can see, their price has been continuously falling ever since 2018, 6 years prior to their application. Amazon's historical net operating cash flow is shown in the following graphs. We can see the difference between Kmart and Amazon net operating cash flow. Since 1997 to 2016, it shows an uphill climb for Amazon's net operating cash flow. In 2016, it reported to be above $16 billion in revenue. And now in 2025, we're probably exceeding way more than that. Their firm began to grow significantly in the early 2000s, and so did their market share in the e-commerce industry. As we can see, the inability of Party City to remain competitive was likely caused by a combination of pandemic difficulties and the fact that it was now easier to buy party supplies and customs online, probably at a lower price, we must add. Looking back, it is clear. This is likely to seem like a no-brainer examination of what transpired to Party City nowadays. However, things didn't seem that way when Amazon went public 20 years ago. Nobody at the time could have imagined that a newcomer online retailer could have taken down a retail behemoth like Party City. And certainly, no one would have believed that Party City would be filing for bankruptcy in just 20 years. This is not, however, a novel occurrence. Consider Kodak, for example. In our content here at Master Investor from a few years ago, Kodak declared bankruptcy in 2012. They had held the reins of the photography business for many years, but they were now losing their grip. For what reason? Kodak did not treat the development of digital photography as a threat. They believed they were too large to fail. They got too comfortable. Sadly, they were not too big to fall. In fact, the worst thing is that Kodak had invented digital photography years earlier. It might have easily been the first to market. They choose to sit on the technology out of fear that it may cannibalize their main business of physical photography. They were afraid to change. They were definitely not visionaries. They needed to implement the new technology. Immediately, Kodak comprehended the necessity for digital technologies, the what, but they didn't grasp how individuals would utilize them, the why. They choose to rely on digital technologies that encourage users to print images, which is a mindset from the industrial age. Kodak was so preoccupied with the photos they produced that they forgot to focus on their purpose was to be shared. Instead of concentrating on technologies that facilitated sharing, they choose to concentrate on those that made picture creation easier while maintaining the obstacles to sharing. Instagram naturally took center stage. With just 13 workers, Facebook paid $1 billion to acquire them in 2012. Over half of Meta's U.S. ad sales are expected to come from the U.S. alone, with 32.03 billion being generated there now. Party City, like Kodak before them and several other companies, just grew too large and sluggish to compete. They believed they were taking the appropriate steps at the time to preserve their market share and maintain the status quo. But when it comes to the markets, there's never a status quo. The only option is to move quickly and adjust to change. He or she will perish if they do not. GE, a 125-year-old business, is experiencing it right now. That's why the need of speed is key when building wealth in today's world, because technology and artificial intelligence have changed the whole game. We need to move fast. Transactions can happen at the speed of light. We can have billions of people looking at our offer within minutes online because we have technology that puts our message in front of the right group of people. So we need to understand how to do marketing, specifically targeted marketing, how to find the group of people that already want what we have. And we need to exceed their expectations when we're presenting that offer to them through our systems that we will have running for our main system, our main business, right? So we want to use the money that we're creating from our business, whether that be selling a product online, it could be a product that we are getting from overseas. We can do white label. We don't need to create the product ourselves. We need to work smart, and we can get started building passive income. The key is to get started. Whatever idea we have, put down a plan and get started with the right steps. Take actionable steps daily so that we can build that momentum that we all need in order to take a business from zero to the next level and grow that business into a real brand. Just like every big business is started small. It's all about finding the right niche with the right solution. Find a need in the marketplace and fill it with the right solution. The 8 integrities of a thriving business. Knowing that the product is not the most important aspect of a thriving business is key. As we can see, the 8 integrities of a successful business are shown on the diagram below from the cash flow triangle. Number 1, mission. Number 2, team. Number 3, leadership. Number 4, cash flow. Number 5, communications. Number 6, systems. Number 7, legal. Number 8, product. Knowing how to establish these integrities requires planning and due diligence into our investment in business. We have seen many people make the mistake of focusing on only one integrity, and then the business collapses because it never had a solid structure or infrastructure to persevere, thriving through time. Eventually, regardless of how big the business is, if it does not have one of the 8 integrities, the business and investment will fail. The foundation of true wealth is found in the ability of reading and improving financial statements, starting with a personal financial statement. Every person, alike to every business and investment, has a financial statement that discloses the financial health of the entity or person. As we can see the diagram of the cash flow triangle, where it shows the integrities of a thriving business. Therefore, let's use the cash flow triangle when we are building our investments because it will come handy. The necessity for speed. Here at Master Investor, we have discussed the new rules of money in our ebook and digital course, the 10 new rules of money, and also how to build cash flow with the internet. And we also have our other ebook, How to Invest in Crypto to Build Wealth. In other articles, we have wrote about the new rules of money. One of the 10 new rules of money is the need for speed. It is crucial to recognize that we are living in an age where knowledge is wealth and information is currently being known as currency. Information is king. Whoever organizes the right information is worth a lot of money because it's priceless, because we have information for free available online that not all information is what we need. We need to dig through all the information and figure whether this information is toxic. Does it come from the right source? Or does it come from a fake source? Or is the right source? So when we find organized information with references, and now we can skip the entire process of spending hours into searching the right information. That's why having our hands on the right information, not just reading anything that shows up on our screens. We need to really be selective when it comes to our information, and when we need to invest into any information, we should, from our mentors, right? Because we don't want to go into the entire internet like a big garbage can of information to try to find the information that we're looking for. We need speed, and that means that we need to create our idea into reality as soon as possible. We need to bring it into existence. Now, it could be a digital product. It doesn't have to be a physical product. And even if it's a physical product, it doesn't mean that we have to have the physical product in our hands. We can use drop shipping. We can use white labeling. So we never touch the product. All we're connecting is the end user with the supplier. And the end user doesn't know that we're sending the product from the factory, straight from the factory. They don't know that. They receive the package with our brand and they're happy, and that's all they care about. So it's all about connecting the end user with the supplier, putting them together to a website, and we are in business, literally. That is how fast we can begin to create autopilot sales. It takes massive action to get wealthy, but taking small steps every day will get us there. It's all about understanding the new rules of money and get this material into our heads. It is important that we walk with a wealthy context. The positive aspect is that this indicates that anybody can become incredibly wealthy if they act quickly enough and can comprehend the data they are processing more effectively than the rivals. This was noticed by Instagram. Amazon understood this. Master Investor also understood this. A lot of other people did the same. The collapse of the party cities and Kodaks of the world is not an intriguing tale because huge giants were brought down. Because quick startups did it. It is intriguing. Additionally, anybody may establish a business like this. But one thing is certain. Everyone who doesn't learn and adapt at the necessary rate will experience financial hardship in the years to come. And everything is becoming digital, meaning that we have to train ourselves to see the world with our minds, not with our eyes, because we went from the industrial age where everything was the biggest was the best in the physical world. Now everything is digital. Big businesses are being run through different homes across the world. And if we could put skyscraper on those businesses, there'll be big skyscrapers on people's homes, because that's how today the world is run, through technology, invisible technology. So let's look at the world with our minds, not with our eyes. And that will help us and understand how to build true wealth. They are, after all, workers of those enormous, sluggish behemoths. Therefore, begin thinking at the speed of information today if we want to be financially successful in the future and create a business plan with a lucrative exit strategy. We need to know exactly how we're going to get out of that business. What is our exit strategy, our investment? How much, when am I going to get my capital back? Right? We need to know that before we even invest. That is the purpose of the business plan, is to give us a path to success when investing, is to ensure that we are going to be investing to make money, specifically passive income, acquiring a real asset that is producing cash flow. And we're going to utilize that cash flow and move it to a new cash flowing asset in a different asset class with speed. We need to continuously move in cash flow to another asset. We should never park money in our banks, under our mattress, because we have a plan ahead. Even before we touch the money, even before we get the money, we already know what we're going to do with each dollar that we control. It's all about learning how to manage cash flow and debt. It's not about being debt free. Remember, because today money is created with debt. Debt is money. That's why using debt is leverage for the business owner and inside investor. Is our best friend. Debt is our best friend. Good debt. Because it makes us wealthy. Because that type of debt is used to acquire an asset. And the asset's cash flow is paying for the debt service, the interest, is paying all the business expenses, and it's also giving us passive income. So it's good debt. So, and that passive income can be tax-free as long as we have a tax strategy established ahead of time with our CPA and tax attorney, so that we can allocate the gains and profits that we're getting from our businesses, including the passive income, to the right places that allows us to minimize taxes all the way to zero. And when we use debt, generally speaking, all debt is tax-free, meaning that we don't have to pay taxes on debt because money is created with debt. Today, the United States is over $33 trillion in debt. That means that inflation will continue to rise the more we print money. And today the world works printing money because on August 15, 1971, that's when President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, fake money, paper money, debt, currency, and an idea backed up by confidence. That is what money is today. It is created with debt. That means that we must operate with that system. Savers are losers in the new economy, and good debtors are winners because money is no longer backed up by gold. So it became a full currency. Crypto is a new asset class. However, crypto is the new money in town because it's also a currency, just like the US dollar. We can pay each other with crypto. We can pay other businesses with crypto. The US Congress accepted crypto as a currency. That's why we need to understand how to utilize the asset class and how to invest in crypto. That's why we created our ebook and digital course, How to Invest in Crypto to Build Wealth. Understanding how to invest among the 5 different asset classes protects us from any type of economy and hedge us from inflation. It's not about competing with inflation. It's about making it our best friend. Inflation will continue to rise because money is created with debt. So the more debt we create as a nation, the more inflation rises, meaning that it will cost more money to acquire whatever we acquire today for the future. So the milk, the eggs, the regular food is going to cost a lot more for the regular person. The person that is working hard for earned income will struggle tremendously because now he or she has to work harder or has to ask for an increase and so forth. That's why it's critical that we begin to invest, even though the person may like their job. Start investing on a side business or start building a side business. Don't waste the time after getting off of work. Put a plan together. Every day counts. Take control over your finances. Figure out where we are today by reading our personal financial statement. We have a personal financial statement on our website. We also have one on our Linktree account. If you go to our link somewhere on the description, you'll be able to find the financial statement that is blank. Anybody can use it to figure out where we are today, which is important. When you get our digital course, How to Build Cash Flow with the Internet, you'll be able to see the financial statement. I have it right here pulled up on our screen. It looks just like this. And basically, we have to go through it and plug in all of our numbers in there. And now we're going to understand what type of assets we have. Do we have any assets? Do we have any liabilities? And all we have to do is download it to Excel, and you can edit on Excel as a blank personal financial statement. Every person has a personal financial statement, and every business or investment has a financial statement. And this is one of the assets that we have inside of our digital course, How to Build Cash Flow with the Internet. Just go to our website. You'll get inside of our digital course, How to Build Cash Flow with the Internet, and you'll be able to access the personal financial statement. It's right there. Complete my personal financial statement. You can download it straight to your smart device and begin to update that financial statement. And that will put you on track to building true wealth, because it's all about focusing on the assets column more than income. It's focusing on the assets column because assets bring us passive income. We want to invest for passive income specifically. Now, in some instances, we will invest for capital gains income, but we're going to make a priority to invest for passive income, or also known as positive cash flow, because that is what gives us true wealth. That will give us total freedom. Okay? Formula for the velocity of cash flow. As we have covered previously, our formula for velocity of cash flow to build passive income, or also known as positive cash flow from real assets, and maintaining the gains working in sound assets. The following is the 5 steps of the formula. Number 1, acquire cash flowing asset with a winning plan. Number 2, recoup the initial capital, invest the back as soon as possible. Number 3, keep control over the asset and its cash flow. Number 4, move the cash flow, passive income, into a new cash flowing asset in a different asset class. Number 5, repeat the steps. That is literally how anyone can obtain IROI, or also known as infinite return on investment, which is the holy grail of investing, as I said early on today's talk, which is the holy grail of investing. When we achieve IROI, that means that we are making money for nothing. Yes, money from thin air, as we have no money of our own in the deal. It is all done with good debt, or also known as OPM, other people's money. When we have 100% finance and we start making money from using good debt, because the debt is being allocated properly and we acquire a asset successful that's producing passive income enough to pay for the debt service, the interest, the expenses, and also leave us with positive cash flow, then that's good debt. And that is infinite return on investment right from the beginning. We don't have to wait until we get the debt service paid back to call it infinite return on investment, as long as we don't have our capital, our own capital invested into the deal. But if we have debt into the deal, that is the bank's money. And if it's making us money, then that's good debt. And that's the type of debt that we want to engage in as we acquire luxury items with bad debt. There's nothing wrong with having bad debt or having luxury items and things that we want to experience that will cost money and doesn't put money into our pocket, liabilities. It's okay to have them as long as we create an asset with good debt that will pay for the bad debt and liabilities cost. And therefore, that will be free because our businesses are paying for that. And we're using debt to invest into an asset that will produce the cash flow to pay the debt service back and also pay for the liabilities expense. We are positioning ourselves to get everything for free legally because we are using the wealthy context. Think and grow wealthy. It's about thinking smart and working smart and applying the new rules of money and let money work hard for us. And we need to be actively investing. We're not going to give our money away to anybody to invest it for us. We are actively involved in investing our capital in other people's capital, or OPM, or also known as the bank's money. Because the job number one of a business owner is to raise capital. As we can see, the cash flow pattern of the wealthy class, we have the financial statement simplified in front of us. We have the income column. We have the expenses. We have on the balance sheet, we have the assets, liabilities. The income is passive income, which comes from positive cash flow. That's the type of income. That's how we make money, through passive income from the assets column. And sometimes we'll have capital gains income from assets that we control. Assets and money work hard for us to make us more passive income, and sometimes capital gains income. All of our liabilities and expenses are paid from the passive income of the assets that we control with our companies. The payments of the expenses go into someone else's column, someone else's asset column specifically. However, some of them can go back to our asset column. Some of those expenses, we can turn them into assets. Some liabilities will be able to be turned into assets. And so we will continuously report back into our financial statement. That's why it's important to update it and be like, okay, we have a liability here. How can we turn this liability into our own asset? Oh, okay, we're going to strategize, right? We have, let's say, a luxury vehicle or something that we have that we not using every day. And now we can rent it out. And now we're making the payments from the clients that are renting our property. And now we're using that money to pay, and now it's making us money. It's not just an expense. It's not just a liability anymore. Now it became an asset, and we're still making the payments, but now we're not making it with our capital. Now the expense and liability became its own asset. Now it goes into our asset column, and now it's putting money into our pocket. And it's also putting money into somebody else's pocket because we're still making those payments. But knowing the difference between an asset and a liability is one of the differences between the wealthy and poor. Financial literacy fundamentals. Finally, the wealthy make certain that their children understand the 4 cornerstones of financial literacy. When it comes to money, this is by far the most crucial lesson we should learn. By internalizing these principles and dedicating our life to acquiring more and more knowledge about them, we will prepare ourselves and our closest to us for financial success. The 4 foundations, or the 4 pillars of wealth, are as follows. Number 1, knowing the distinction between an asset and a liability. Also number 2, knowing the difference between capital gains, income, and cash flow, or known as passive income. Number 3, becoming wealthy through the use of good debt and taxes. And number 4, choosing our own financial path by actively investing, meaning that we're not giving our money away to anyone to invest for us. We are educating ourselves daily in the different asset classes, and we are using our capital and other people's capital, credit cards, loans, to invest in sound assets that we control with our companies. All parents should talk about money to their kids daily and teach them these concepts that can help them as they grow in life. The lack of discussing about money and building true wealth within households is the main reason families do not reach their highest potential and end up splitting. Money is a subject we should master as it is a game that we will be participating in for the rest of our natural lives. In this world, money is the most important medium to get what we want done on this earth. It would be clever to continue in developing our skills in business and investing. Success is something we attract by the type of people we are becoming. We must strive to understand and operate with the wealthy context, departing from any old and obsolete lesson about money and replacing it with the new rules of money. Money is always evolving, and we have to adapt to the changes as they become real. Today, we must work to build passive income and multiply money in sound investing. That's how we protect ourselves from any type of economy, is by controlling assets in different asset classes. We have reached our bonus question of the day: how to unlock financial freedom using real estate cash flow strategies. So we talked about the 5 different asset classes. We have real estate, we have business, we have crypto, paper assets, and commodities. Before embarking on a real estate journey, ensure we understand the distinction between capital gains income and cash flow, or also known as positive cash flow. Only one can lead to true wealth, which is cash flow. That's why cash flow are the most important words in the business language. Not only because cash flow must always move from a cash flowing asset to another cash flowing asset to maintain its value. For money to maintain its value, it must always be moving from a cash flowing asset to another cash flowing asset. However, cash flow is the most important words because ultimately that's what every inside investor and business owner wants, is to have excess of cash flow. That's why the 3 E's of a master investor are: number 1, financial education; number 2, financial experience; number 3, excess of cash flow. Once we have those 3 E's, then we know we are a master investor officially, because we are thriving through passive income. Here are the keys to create passive income and real estate wealth. Do not hesitate to begin with small steps. Each prudent investment is crucial to our journey towards financial freedom. The accomplished husband and wife team featured on HGTV's Flip or Flop show keeps audiences engaged as they acquire dilapidated properties with cash, sometimes without inspecting them, and subsequently renovate and resell them. And wow, do they manage to make it seem effortless, consistently coming out ahead financially regardless of the obstacles they face. And their profits only come if they sell for a higher price than the purchase for. They are not in the business for positive cash flow or passive income. They are focused on building capital gains income. In order to become an inside investor, they will need to upgrade their financial education and put together a winning business plan with the lucrative exit strategy that will create passive income. The strategy must change. They could turn that flip and flop into a cash flow operation by holding their real estate property and renting it either through short-term rentals or long-term rentals. Then they should begin using their capital gains income to raise additional capital and invest it in assets that produce positive cash flow or passive income. Invest in it with a plan in all the asset classes that exist today. That is how to protect ourselves from any type of economy and hedge for inflation. In reality, actual flippers may not achieve the same degree of success. Numerous issues can arise throughout the process, from selecting the wrong property and overpaying for it to facing unforeseen and costly repairs or struggling to find the buyer quickly enough. This is where investing for capital gains instead of cash flow carries inherent risks. The 8 essential words for true wealth. Learn these 8 words which are essential to building wealth. We are seeing a simplified financial statement on our diagram below. As we can see, there are 8 words that are essential to understanding financial statements. We have the income statement, we have the balance sheet, right? And the 8 words are the following. Number 1, income column, right? Number 2, expenses. Number 3, cash flow. Number 4, assets. Number 5, liabilities. Number 6, net. Number 7, buying power. Number 8, credit. Understanding these 8 words and learning how they apply in our personal life, regardless whether you are making money right now through a business or you have a job, it doesn't matter. You're still managing money. You need to take control over your cash flow. And the only way to do that is by viewing our financial life on a piece of paper. So a good exercise is to go to our website, get our digital course, How to Build Cash Flow with the Internet, Turn Passive Income On, and get started by filling in a financial statement that we have available for our members on our website so that we can know exactly where we are financially today so that we build a plan to go to financial point B, where we want to be tomorrow. And we want to do that fast with a vehicle, an investment vehicle that will take us from point A financially to point B financially quickly, fast, and with guarantees, basically, right? Because we understand that investing in business comes with risk, but it's not investing in business that makes such sport risky. What makes it risky is the investor and the entrepreneur or the business owner behind such operations. So it comes down to who we are. Are we studying? Are we applying financial education into our daily lives? Are we investing into mentors that have done what we want to do? So it comes down to our leadership. How good of leaders are we? And are we improving every single day? Are we making an effort to become better and better each and every single day? And something that we can all do is to become a little better every single day. The truth about real estate investing that no one discusses is flipping versus holding. People invest for 2 main reasons: cash flow, or also known as passive income, and capital gains income, or capital appreciation. The one-time gain we realize when we sell an investment is referred to as capital gains income. Capital gains income are based on the idea of purchasing a bargain price and selling it for more. To realize capital gains income, the asset must be sold. Capital gains investors gain as long as market value rises. However, capital gains investors lose when the markets decline and prices drop. Also, in many instances, when we obtain capital gains income, then we must pay taxes on those gains, with the exception of when we use advanced strategies to legally defer the taxes on the capital gains income, because we will be investing it or investing those profits into a bigger or more valuable cash flowing asset. In doing so, it allows us to not pay taxes on the profits legally. A continuous stream of income from an investment is referred to as cash flow, or also known as passive income. And passive income legally stacks at the lowest bracket out of the 3 types of income. Out of earned income, which is taxed at the highest bracket, that's when a person exchanges time for money. That type of income comes from a job or a salary, and the person must actively be present to make that type of income. And that person will pay the highest in taxes from all the other types of income. So we have earned income at the highest rate of taxes. We have capital gains income, which comes from investing, and it stacks lower than earned income, but higher than passive income. And then we have passive income, which stacks at the lowest bracket, and that's the type of income that we focus on building here at Master Investor. We focus on building passive income. We work to build passive income and multiply money and sound investing. That's rule number 1 of our community here at Master Investor, because that's what the ultra wealthy do every single day. Using the advanced strategies to legally defer the taxes on the capital gains income by investing it into bigger assets and following the requisites of the law. That's what's important, that we talk to professionals when we invest. We interview attorneys, CPAs. We learn from them. Not all professionals are meant for the wealthy context. We need to learn the lingo of the wealthy so that we can pick the right professionals for our team to help us minimize taxes, legally keep more of our cash flow so that we can invest it in different assets and become more wealthy and make more passive income and pay less in taxes, even though we're making even more and more each and every single day as we grow our wealth. Passive income is the best type of income that exists. The investment determines whether we will be paid this money monthly, quarterly, or yearly, or daily. Buying and keeping is the underlying premises of positive cash flow. If everything goes well, we will certainly make a killing by flipping one property, but how replicable is that approach? Because every time a person begins a new flip job, he or she is up against a lot of unknown factors that need to be overcome in order to sell the property. Experts will disagree. He or she might be fortunate enough to turn it around and make a profit. However, he or she could just as easily fail. There are just too many risks involved when it comes to investing for capital gains income in the hopes that the market will change is a strategy that the financial uneducated applies, which is buy, hold, and pray. It's too risky. We want to go into an investment knowing how we're going to get out of that investment and how soon we will get out of the investment, because we are reading facts, we're crunching the numbers, we're reading the tax returns from that investment, the financial statements of that investment. We know exactly what assets, what liabilities are involved in that operation, and we understand the numbers. In good deals, the numbers simply work, and in bad deals, the numbers do not work. So it's all about doing our due diligence. And investing, if the numbers work, then the deal is sound. However, if the numbers do not work, then the investment is toxic. Reading financial statements of the business will give us an unfair advantage as to making the right choice to either acquire the asset or simply decline the offer. Due diligence are the second most important words in the business language. The most important words are cash flow. When we focus on our cash flow and doing due diligence by inspecting the financial statements, then we can have the answers we are looking for to get. The mechanism of cash flow or passive income. When we buy an investment and keep it, we get cash flow, or also known as passive income. After that, we get money back from that investment every month or quarter or year or even daily. Cash flow investors typically don't want to sell our investments because we want to keep earning the consistent cash flow income. We want to compound our cash flow by investing that cash flow into different asset classes to bring more cash flow and sometimes capital gains income. For example, if we buy a dividend paying stock, then we will get a cash flow in the form of a dividend as long as we own that stock. Imagine that we buy a single family home in real estate and opt to rent it out rather than renovate it and sell it. We pay the bills, including the mortgage, and collect the rent every month on autopilot because the renters are paying for the mortgage ultimately, and it's putting money into our pocket. After all expenses are paid, whatever is left is our positive cash flow. We will earn a profit, positive cash flow, if we purchase it at a reasonable price and handle the property well. The chain reaction of real estate. One of the greatest aspects of cash flow is that we don't have to accumulate hundreds of thousands of dollars in savings to achieve financial independence. The reason is that cash flow generates further cash flow. By what means? Here is another illustration. Even if the initial cash flow of our investment is not a big amount yet, it is something to be proud of achieving, as many never get to experience what it is like to have cash flow or passive income coming into our accounts, even when we are sleeping. Let's say the average monthly cash flow is an outstanding $50 from our first investment. Although it's not much, it is the beginning for true wealth, and it comes from passive income. Indeed, that $50 monthly payment in passive income is the initial step in the direction of the cash flow we currently continue to build. The point is that we must get started and compound the assets column with assets from all the assets classes that exist today. The following are the 5 asset classes. Again, number 1, real estate. Number 2, business. Number 3, crypto. Number 4, paper assets. Number 5, commodities. At some point throughout our investment journey, the money flow from our assets covers both our living expenses and future investments. New assets are acquired through our cash flow or passive income, which in turn generates more cash flow. Isn't it amazing? Money for nothing, or known as IROI, infinite return on investment. We successfully understand how to create money from thin air. Repeat this mantra. Cash flow is our best friend. Good debt is our best friend. And it can help anyone break out of a scarcity mindset and keep increasing our wealth. When we invest with the wealthy context, then we can better understand the cash flow tetrahedron diagram below, where it clearly shows that our business's cash flow pays for our expenses and investments. We use our businesses to leverage our wealth by investing in all the assets classes that exist. As we can see in the diagram, we built a business. We use that business to pay for all of our living expenses and all the expenses of that business. And eventually that business is creating more profit, and we're using that as a down payment for real estate investment properties. And we're using that capital from the real estate to invest on other assets such as paper assets and commodities, including also the newest asset class of crypto. So everything is eventually acquired for free because we learn how to recycle that capital back to us and create more money from thin air using debt like the wealthy do, and paying zero in taxes legally. There's no reason to hide money. There's no reason to not show the government how much we're making, because it is all about showing how much money we're making through the right documentation with the right plan behind it, so that we can allocate the profits into the right places to minimize taxes by following the tax code and corporate law. Additional advantages of increased cash flow. We are free to do anything we want once we are financially independent, as seen by the fact that cash flow equals freedom. We have the option of starting a new business endeavor or living a life of luxury. We may pursue more interest, travel more, and plan our own schedule. The goal of cash flow is to alleviate the anxiety of running out of funds during retirement. Our cash flow will continue to flow like clockwork as long as we retain ownership of the asset and we have the right group of people around us. We need to trust our team. We need to develop our team. We need to upgrade our team. We need to grow our leadership skills as well, ongoingly. Additionally, it has the lowest tax rate. Passive income. This is not always the case for capital gains income taxes, which we'll get if we sell a property. Last but not least, a property or an asset could be in a different asset class. Last but not least, we don't have to wait. We may start earning money as soon as we find a tenant for the home. Our objective should be to have more income than we spend on our everyday needs. The pinnacle of financial independence is when our assets work for us rather than the other way around. Insights from a partner here at Master Investor case study. This might naturally appear to be either excessively simplistic or a little bit frightening. The fact is that the only way to gain confidence in our real estate investment pursuits is to improve our financial knowledge. As a master investor's partner, Maria, whose name we changed for privacy, offered her insights. About a year ago, she was in the same position as many of people are now, figuring out how to plan for retirement and manage their finances in the current economic climate. With the help of the master investor's knowledge and the support of the appropriate team members, her and her family are currently on the correct route to a financially stable future, despite the fact that they don't have much money or wealthy relatives. As we know, it does not take money to make money. First and foremost, it takes financial education to be able to multiply money, to be able to make money. It takes financial education. You can give a person that has no financial education money, and that person will end up spending the money in the wrong places and will not make that money make more money. That's why a lot of people have money in the bank today, but they don't know how to invest it. Otherwise, they will be investing it themselves instead of giving it to somebody else to invest it in fake assets, because they also don't know what they're doing because they're salespeople. They're not real investors. So the first step is to get financial education to be able to make money. So it takes financial education. That's why knowledge is the new wealth. Once we have the knowledge and we apply that, then wealth is attracted to us. Then once the person has the wealthy context, he or she can make money through sound investing. However, someone without financial education and with money, it is not guaranteed that the person can make the money multiply. It takes time, effort, and a good mindset to become a real estate investor, but the thrill of learning new things that can truly improve one's life is unparalleled. Master investors' concepts are completely correct. After all the research we can do, we have to put it into practice. So we are at last on our way. With the help of our master investors coach and team, we established our legitimate real estate investing enterprise over the course of several months by bringing together our team members of lawyers, CPAs, bookkeepers, and real estate brokers, but not limited to these professionals. We began looking at properties, crunching the figures for positive cash flow, and making offers since it was time to act on what we have been learning. Although it can be occasionally annoying, we got to be supportive of each other and persevering. As a result of our patience and perseverance, we will find that our bids for properties will be accepted. We will be overjoyed to get the keys to the house that we are using to create passive income, or also known as positive cash flow, when receive the first tenants for our properties, freedom units. Because ultimately they're creating freedom to us, right? We want to create real assets. We want to acquire real assets, or also known as freedom units, because they provide total freedom. If the asset is bringing us positive cash flow, that's a freedom unit. It's giving us more freedom. What about our strategy? What are the obstacles preventing us from realizing our financial aspirations today? For more information, check out Master Investors Financial Education Community. Subscribe to the newsletter if you want to receive these articles via email, and get access to all the wealth tools that we have available for our members on our store. What are we waiting for? Today might be the beginning of the rest of our life. What problems do we want to solve with a sound business? Becoming wealthy is all about becoming more generous, no more greedy. It is truly about solving problems for humanity, which require us to think for others, not just for ourselves. Using today's AI and technology available to all of us, we can create true wealth with speed. It's about expanding and living above our means, not living below our means. When we build well, we want to expand and always live above our means, because we're going to be networking with high net worth individuals. We're going to be putting ourselves in the right places with the right mindset, with the wealthy context. And we need to go in deep and change those core values about money and figure out what we need to let go that no longer is serving us. Begin with creating a business plan so that we know exactly where we are right now and how we're going to get to point B financially successfully. start investing in our financial education here at Master Investor. Go get the 10-year rules of money, how to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth, understanding Bitcoin and blockchain, the rise of legitimate reserve digital currencies and assets. We also have additional tools and content available on social media. Find us on Instagram. We have a podcast, our newsletter, our YouTube channel, TikTok. Make sure you join our digital courses. We have a Facebook page, also a Discord, Inner Circle. Today we cover why the need for speed is key in wealth. Master Investor's mission is to be the global, authentic brand of money, business, and investing that elevates the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities to build passive income, win-win partnerships, and true wealth. Make sure you visit our website to have access to our digital courses available on stores. We also have our books on Amazon. If you like to read them on Kindle, find them there. However, by getting in through our store or our website, you'll be able to have additional assets because each ebook comes with assets in a digital course. So go grab it from our website because it's more beneficial for our members. I appreciate your time today. Make sure to leave a comment below. If you have any questions, let us know. And I hope that today's talk has been helpful and it has shifted something inside of us so that we can all build more wealth in our life. Stay extraordinary and wealthy, bringing you the good and bad news of money, the business principles that work in all economies. Bye for now.